Hey everybody, Josh Sigurdson of World Alternative Media here, and we're joined by author and economic analyst here at WAM, John Sneisen. And I was looking into a Zero Hedge article called Here's Why Italy's Banking Crisis Has Gone Off the Radar, and John's going to go into it a bit, and then we're going to elaborate on the story further from the original article, because we have spoken in the past about Monte dei Paschi Bank in Italy, one of the world's oldest banks, I think actually the world's oldest
bank.
And how they were pushing for a bail-in, and that bail-in turned into a bail out, and we're going to go into how the crisis has unraveled. As we said, we would continue to break down this story. So, John, can you go a bit into this article?
Yeah, so what's going on in Italy, of course, it's nothing has been saved or anything. Like, of course, they've, printed all this money. They, saved the bank for a little while. The thing is, what you need to understand is when they save the banks, they actually don't really save them. They just, keep it afloat for a little bit longer period of time. And of course, that's the case in Greece and a whole array of other countries that are basically bankrupt. Now, when I look at this article here, of course, it talks about how there's several banks that has something called a Texas ratio that is over 100%. Now, a Texas ratio is calculated by dividing the total value of a bank's non-performing loans by its tangible book value plus reserves, or as American money manager Steve Eisman puts it, all the bad stuff divided by the money you have to pay for all the bad stuff. So that said, I'm going to go into what the Texas ratio is for some big banks in Italy. And it's actually very terrible. Out of the 500 banks that they have in Italy, 114 of them are over 100%. Now, if the TR is over 100%, the bank doesn't have enough money to pay for all the bad stuff. So basically means that they, over leveraged themselves and they have so much bad debt that they don't have any money that they could save themselves with. So they would have to, go, even a bail-in wouldn't save the bank. Basically. So it's quite interesting. So looking at, there's 24 of these banks that have 200%, which is very, very severe. Of course, Monte dei Paschi Siena, they have the highest one at 269%. And then you have, next up is Vento Banca with 33 billion in assets and a TR of 239%, and then you have Banco Popolare di Vicenza. It has $39 billion in assets and a TR ratio of 210%. So what you're looking at here is these banks in Italy, the whole Italian banking system is bust. They can't save it, no matter what they try to do and put out there.
Well, John, can you explain what has put them in this situation in the first place exactly?
Well, when it comes to borrowing money to anybody, what banks usually do is they start, with borrowing to the people that can afford to pay for it, right? And then at one point, what happens is you actually run out of people. And that's what happened in the United States, how you had the 2008 crash with all the subprime mortgages. Well, subprime is basically people that really can't afford it or can't afford a big hike in an interest rate or anything like that. So what happens is, of course, the bank, then, borrow money, and they don't have anybody else to lend to but bad borrowers, people that can't afford to have the money. So then, of course, they will have to keep continuing this debt bubble because they need more people to pay off the interest and so on. It's a vicious cycle.
It's a cycle that always busts in the end, too.
Yeah, of course. There always has to be more people getting into this train in order for the whole debt, principal, and interest system to work. And now, of course, the interest in a system like this, we have, like we said, that not necessarily all debt is bad when you charge interest. The thing is, when usury gets, used on assets that can't really pay back or bad investments and so on, that's when you get the issue, because now you're going to keep on, blowing in more and more debtors in order to feed the interest. And basically, you will see the scale of debt just go up like this exponentially. And that's what's happening in Italy. Of course, they've run out of people to borrow to, and they've just been borrowing to people that can't really afford it. And they, of course, be borrowing to the stock market through margin debt. Like, there's a ton of terrible, bad debt in Italy. The thing is, I would actually, this is a parallel we should make, Josh, to, the mafiosos in Italy. Of course, the banksters are no better than the mafiosos in Italy.
Well, I would actually say that the mafiosos are much lower down than
actually, yeah, because they're more lower thuggish type of behavior. While the banksters, the banksters, they sit on top and, give these mafia people and everybody else, the money. Because they are the owners of everything. And of course, they know that the ECB will continue to bail them out. And what's going to happen is they're going to continue to bail this out. It's a constant cycle of bankruptcy, bailout, bankruptcy, bail-in, bankruptcy, bailout, bankruptcy, bail-in. It's going to continue until people loses the trust in the banking system. When there's too much money slushing around and the euro or the US dollar, any currency, are at the point where people are saying, well, this is so unsustainable, it's never going to be paid back.
The faith is lost, and that has happened historically with every fiat currency, as we go into so much here at WHAM, is that all fiat currencies eventually revert to their true intrinsic value of zero. It always has happened. It always will happen because fiat is printed out of thin air, it devalues a dollar, creates debt and inflation, and eventually it goes bust. It's devalued to death. People's faith in it is lost because it's worthless. Imagine like investing in a stock and you just constantly saw that stock going down and down, and you're like, oh great, good, this is great, I have so much faith in it, and it just keeps going down over 100 years, never really going up more than a little bit compared to the drastic drops it's taken.
The stock actually goes up in value historically. Well, it's not really going up in value. It's actually the currency that buys that stock that has gone down in value.
Yeah, but looking at it from like free market level, like just watching it constantly, consistently going down, it makes someone wonder, why would anyone have faith in it? And it makes me come to the conclusion that we need to lose our faith in it. We need it to crash so that we can build up from a free market, free monetary level, instead of constantly getting trapped in this debt enslavement paradigm, which has gone on for more than 100 years in the U.S. and then before that from 1812, I believe, till 1833, and in the 1790s as well. This just goes on and on and on. It's almost 1,000th year anniversary, 1024 AD in China, of the first fiat currency just printed out of thin air and just devalued to death. And it's happened hundreds of times. It's crashed every single time. When will people learn? And with Italy, these banking constructs where they keep getting loans from the IMF and bailed out by the ECB and all these guys. It just, how many times does this have to happen for people to realize, hey, this isn't safe. This is really risky. I don't want to be involved in this. And not to mention, when your money's in the bank, it's not yours, it's the bank's. Yeah. So with bail-ins, they just rob you of all the money from your account to pay off their stupid debts with their risky investments. With bailouts, it's the same thing, except for it's a populace, the taxpayer.
Well, the thing is with the whole current system of how the banks run, in the old days it used to be savings and loans banks. There was the risky side of the banks, that did all the mortgage lending and savings.
The Mr. Potters from It's a Wonderful Life.
Yeah, and then there was the investment banks.
Yes.
The investment banks, you knew that it was high risk, that they put your money into whatever kind of investments you wanted to get into. Mm-hmm. But they were separated. Today, it's not anymore. And you have the investment side and the savings and loan side merged as one, so they could do as much terrible in investments that they would push on people, so on. They know that we might fail, but we're still gonna earn all that money. The way the banks earn money, guys, is through the fees, the interest. That's the only way they really make money. And of course they have to create derivatives on things, and that's how they make the fees on it. They create a derivative, sell it for a fee or for an interest. That's the whole business plan of the banks. Well, there's nothing else. But they print it out of thin air. It comes out of nothing. That's the thing. Like, think about if we could do that as a business. We could create money out of nothing.
Literally grow it off of trees. And, oh, man, the derivative market, that is what just... It's so mind-numbing, but it's so important, too. And it's made difficult on purpose.
Well, if we were to talk about a nuclear war that is emerging, I think, you know, of course, there's talks about World War III and everything. I think there's a massive nuclear bomb about to go off at any time.
In the monetary system,
you know, it's such a complex system. You know, the little atoms are running around. You know, all these financial derivatives are just moving around like this all around the world. And then suddenly they collide, and then you got the Big Bang, the nuclear blast.
Well, it's kind of like...
desolate the financial system.
It's kind of like how Stephen Kendall, what Stephen Kendall showed on the Max Kaiser show. He's been a guest on our channel many times, where it's just this big wrecking ball. It just grows and grows, and then it's swinging back and forth, and it's knocking over everything.
It gets, you know, it starts with the small one, you know, the depth, and it gets bigger and bigger, and then it's so big that it's, even by it moving a tiny little bit, it knocks things over. So it's what a great explanation.
Incredible analogy, and we always like to promote Stephen Kendall's excellent work. You can find him on Twitter at Stephen P. Kendall. But what is the bottom line for this report, John?
Well, the bottom line is the banking system, not just in Italy, is bankrupt. It's bankrupt everywhere. There's no banks that have any money to pay whatever back anymore. And of course, it's run on this fractional reserve, fiat, out of nothing system that, of course, will fail because of the way it's built. So what you need to understand, you need to start protecting yourself. We say this so many times, but this is, of course, for all the new viewers. You need to protect yourself with gold, silver, have, you know, your food and everything.
Historical preserved value. And like you kind of went into, we always get comments, you can't eat gold. Of course you can't eat gold, but there's a whole bunch of things that you should have in the case of a crash. So there's food, water, shelter, independence, but then there's also defense, because otherwise you're just rounding things up for the toughest guy on the block. And then, of course, sound money, because unless you can grow a crop in a day or you can hunt incredibly well, you're going to want to buy food instead of resorting to stealing it out of desperation. So it's important to have sound money. I know this sounds dramatic, but it's happened literally thousands of times over history.
Let me put it this way. I have a colleague of mine that I work with on a daily basis from Croatia. Now, when he grew up through the hyperinflation in 1993 in Yugoslavia. And he told me, you know, they got along because they had, you know, a little farm and everything, so they weren't too terrible, but people were starving. But he said the people that had the gold and silver became very wealthy after.
Of course, and just get out of the centrally planned system, go decentralized with even like cryptocurrencies. Yes, they're more risky, of course, than sound money in the long run, in case a power grid goes down, etc., etc., etc. But it's also a giant length, a universe apart from the centrally planned system, which enslaves people in debt and pushes them into servitude to the state and the banking system.
Yeah, and remember what's coming. We've had a couple of videos on the cashless society, and we went in depth. I highly tell you to go and see the Cashless Society report that we just did.
We've done several, and it enslaves us to the banking system. It destroys our privacy. As I said, the money that's in the bank isn't yours, it's a bank's. And if it's a cashless society that's centrally planned, then it's always the bank's, never your money. It's always digital transactions. They can see every transaction you make. They destroy privacy and any remnants of free markets and free monetary systems. And on top of that, they're trying to incorporate it into the special drawing rights of world currency.
Yeah, and that's the end game of it all, and that's where we're heading. That's why we need to really fight what these guys are doing. We need to get all these messages out, all these videos that me and Josh are making. Go and make your own videos. Please do so, and share what we've shared with others, because if you don't, we're going to end up with that cashless society, because that's what they're pushing for. Go and look at the news articles around the world, and I could pick out from their playbook, the Curse of Cash. I could pick out, you know, where they have these cashless moves in place. So protect yourself, guys, and stay safe.
Absolutely. Be independent, voluntary, free human being, apart from the state, apart from the banking complex, and speak for yourself. Do not be enslaved. Do not be shoved into a bottomless pit of debt where you can't even get out, because the more you try and struggle to get out, more dirt comes down on your head. This is basically the end game of the globalist agenda, and you need to do whatever you can to save yourself, save your family, inform others, and you know what? It won't be that bad if you are prepared. But if you're not prepared, then you're going to be hit and stuck between a rock and a hard place. So thanks, John, and we'll be back at you with much more. Check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated. And of course, check our link, our address in the description and the comments for Bitcoin. And I'll put the QR code on the screen for you to scan if you so please. Thanks again, John, and stay tuned for much more. This is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth, be the change.